Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. How you going? Welcome to the show. Welcome back into 2021. And we've only really just kicked off a week or so ago on the Smart Property Investment Show. We were right through the holiday period, releasing podcasts, making sure you're informed, knowing what's going on in this crazy world of property. And I think 2021 is going to be a big year in property. And it's something that I'm very excited to be part of, navigating it, helping you steer your buying decisions, selling decisions, investment decisions through the great work done by the team here on Smart Property Investment. It's going to be a lot of investor stories this year, mixed with us sharing our journey as property investors ourselves on the Smart Property Investment portfolio. Go and check it out, smartpropertyinvestment.com.au, as well as speaking to those people that I turn to make sure I'm more informed about property. So these are the experts, the commentators, the data providers, the influencers, you want to call them in property, to make sure we can give a real blended view on property investment in Australia and how you can go about doing what you're doing better. It's still a pretty interesting time when it comes to property. I think everyone would have been going into the sort of middle of December thinking, hey, we seem to have beaten this COVID thing okay. Literally a couple of days later, into lockdown again, borders being thrown up. No one can travel in Australia. People getting stuck on their holidays. It's a horrific time, but get used to it. I think that's going to be what COVID life is like. You know, plan for what you can plan for, but always plan for the worst. And, you know, it's not going to be easy as property investors moving forward. But that said, it's a pretty hot market out there at the moment. And I talk about markets right across Australia. So we'll be getting into that over the earlier part of 2021, helping you potentially maybe shape some of those decisions on where you're going to be looking at property. But we love investor stories here, getting into what the actual investors are up to on the street, day in, day out, those that are passionate about property investment, who are looking towards property investment, not only something which is, inverted commas, a bit of a hobby for them, but a really good wealth creation tool. One of them is Jeremy Iannuzzelli. He's a good friend of the Smart Property Investment. He normally comes on about this time every year to tell us where he's been on holiday somewhere in Europe. I doubt that's happened this year. He would have been locked up like in a hotel in Wuhan somewhere. Jeremy, how you going?
Very well, mate. Very well. No holidays this year. And it's reflected with what's happened in 2020. I bought lots towards the end of the calendar year, which was good, and followed my mantra of always buying around that Christmas break as people kind of clock off, and I'm still ramping it up.
So this is like a bit of a New Year's tradition for us to get together, mate, and see where you're up to on your property investment journey. And I know you've got a bit of visibility yourself now. You're sharing your journey through property, which is cool, working with people. And for those that don't know, Jeremy, his day job is an accountant, but his other job is being a property investor. To give us, you know, and for me, myself, mate, I need to check in. Give me some sense for the portfolio now. What's the sort of value of it? How much debt you got? And I know you can talk about numbers, so this is good. And, you know, give me the LVR position and how many is in that portfolio.
Yeah, so at the moment, LVR's floating around about 60%. So there's around about $4.5 million worth of overall debt versus, say, give or take around about $7 to $7.5 million worth of value, I would say, which is quite conservative. I think, as you mentioned earlier, 2021 and I think 2022 is going to be a huge year. A huge couple years in property, just obviously due to low interest rate environments, which we've never seen in the past. I think there's going to be a lot of asset inflation driven by huge amounts of stimuluses that the government has put out there. And their approach was fantastic. Instead of going from the top trickling down, they hit the bottom where they needed to with the JobKeeper and JobSeeker for small businesses and medium businesses. And, you know, the amount of liquidity that they provided the banks through, you know, fractional lending, which is another way of getting money out in the economy. We'll start to see that being passed around. And that's, you know, fractional lending is virtually money being printed on a screen. You know, and the economy growing from that way. So I think 2 years, next couple of years, property is going to go gangbusters. I've really geared myself up for that. I thought coming into Corona, things would have a major setback and there would be that fiscal cliff in September they all talked about. But the government just kept on releasing more incentives to kind of calm that storm. And from there, it's actually produced, I think, a much bigger snowball, which is only going to compound over the next couple of years.
So as expected, you started talking like an accountant as quickly as you had the chance to do it, mate. And that's the way you love it. I know you spend a lot of time with small businesses, helping them out with what they're doing. So, you're fortunate, you're probably in a privileged position that you get to see how other people are navigating COVID at a grassroots level and making those decisions to move on. So I'll pick your brain towards the back end of the podcast, mate. We'll have a chat about property into the future and what it means. But for your personal portfolio, so 60% LVR, $4.5 million worth of debt, about $7.5 million in asset value. Nice portfolio. How many properties in there now?
2020 was a good year. 5 properties I acquired that year and I sold 2. So I'm close to one settling to sell very soon. So I'll be 19 properties.
19 properties. Okay. So it's a pretty large portfolio in the big scheme of things. For those who don't know Jeremy's portfolio, you can go and listen to it. Search about this time every year. We normally have a bit of a chat. But give me some sense, just top line areas where you've invested, what sort of assets you've got. Just give me a quick sort of brief on the portfolio now, those 19. You don't need to go too specific.
So obviously in the eastern seaboard of Australia is where I've invested. I've just got one settling today in Perth. So that's my first property into the WA region. So I've got a couple settling to purchase and settling to sell. So it's been, the back end was pretty busy, but last year, 2020, there was 2 properties that I acquired in Queensland and one property was a buy, renovate and sell. And I bought one in Perth and I recently bought one which settles at the end of this month in the south coast of Sydney. Which is in the Shell Harbour region, very close to the water. And I suppose that was a very strategic buy. I'm trying now to, I suppose, hedge against, any potential property downfall that may come well into the future. And I'm looking at ways that you can strategically have a defensive portfolio, and that's typically been through coastal properties, purely driven by supply and demand. And it's a good little property. It's a duplex block. I've gone into that with my client, who's also my friend, and he's a town planner. So we knew exactly what we could do on this property. It was a 555 square metre block, zoned R3, 100 metres away from quite a lovely beach in Shell Harbour.
Give us the name of the beach. Come on.
It's in a place called Warilla.
Okay.
So it's segmented into many different areas. Warilla, you've got properties as low as 400,000 and properties which are selling for upwards of 2.5 million, all in the space of about 10 different streets. So as close you get to the beach, obviously that price rises quite substantially.
So you're going to build a duplex on it, keep one each? Is that the idea?
Keep one each, do a deed of petition, keep one each. And, that's going to be our strategic buy, defensive buy. And we've worked out, we've got told from the agent that there'll actually be pretty strong rent by the time we, it's available to rent. So we're pretty happy about that one.
Yeah. So let's drill down a little bit more into this Shell Harbour property. And for those that know Shell Harbour, that's the sort of region sort of south of Wollongong. It's my geography, right? Sort of to Kiama. That's sort of Shell Harbour way.
Yep.
That's fine. Yeah. Okay. So what'd you pay for the block?
Paid $850,000 for it with an old 2-bedroom home on it.
2-bedroom, which you got rented out now?
No,
Okay.
It settles on the 22nd of January.
Okay. And what are you going to do? You rent it? Are you going to knock it straight down?
Well, we were very lucky. So we got consent from the owner to lodge the DA. Cool. Very lucky to get a DA being lodged prior to it settling. So we're hoping it should take anywhere between 1.5 to 2 months to come out. Shell Harbour Council is pretty quick with their approvals. But if it doesn't, then we do have the contingency to rent it. And the rental market's quite strong there, where if we were to rent it, we'd probably be getting about $450 to $500 per week. So it's not the worst case scenario as a holding yield.
Yeah.
But ideally would love to get it going as soon as we can and have a build being finished in December to take advantage of a very strong summer market.
And what sort of structure did you buy this in? So it's a 50-50 with this mate of yours. How'd you structure the deal?
So to do a deed of petition where he'll walk out with one half, I'll walk out with the other half, both properties need to be identical in size and essentially nature. So he's gone into it with his entity, I've gone into it with my entity. And at the end, when the subdivision's all getting done, you get a solicitor to lodge a deed of petition. So he'll have his side and responsible for his side and responsible for maintaining his debt, and I'll have exactly the same.
Okay. And what did you buy? So it was $850. Did you sort of, what sort of deposit need to go into it?
We've gone into it with quite a large deposit because valuations will always be impacted in an area like that when you've got such a broad range of properties selling for such expensive amounts. Yeah. So we've had to go in with quite a heavy deposit initially. And there will be obviously more deposit that goes through with the build. Yeah. Getting the lending for it, there's 2 different ways to do it. You can get the lending based on GRV. Some banks will lend on GRV 60 to 65%. And for anyone out there, GRV is gross realised value. So what the value of the entire thing will be what they deem it will be at the very end. Or you can go through, once you submit your plans and, you could get the bank to do an end valuation. They'll lend, say, 80% or 70%, depending on their risk appetite. So a little bit trickier, especially when you're going in a joint venture. And, I always recommend people get joint venture agreements and heads of agreements or shareholders agreements, something similar to that. And that way you can kind of control any mishaps that happen along the way.
Yeah.
But very fortunate to go in with someone very like-minded like me. I've known him for a long time. He's a client and he's also a town planner. So
That helps.
we're able to get the plans being drawn pretty much essentially as we're signing the contracts, and a DA being lodged a day or so after into cooling off.
Yeah. How are you working it out? So you both got a bit of an X factor to it. You're just not bringing money to it. You're bringing experience. He has the town planning capabilities. Are you just sort of putting your time in there at zero value? Is that how you're working it?
Essentially at the start, zero value. So I'm really to make sure that things go smoothly. So the feasibility, I've got a great network of builders and clients around me who can do lots of things. So I've got a client who will come in and demolish the home very soon, and we've got a very attractive price. So it's putting that together and walking out hopefully with a very good asset to show for it, something that we're very proud of, and at the same time it's made a bit of money the whole way through the process.
Yeah. And is this at any level a potential holiday place for you guys? Are you thinking it that way?
Look, the market's very strong there. We were looking at the Airbnb market there just to see what's going on, and a property just down the road with beach access is renting for about $1,650 a week as a long-term lease, and there's properties there that have been renting for $800 a night during the summer at Airbnb market. So again, strategic buy, defensive buy, because it's coastal, hopefully hold its value, but at the same time, it's also buying for the environment we're in. I don't think we're going to be going overseas for a very long time.
Yeah.
I think COVID and the measures that are around are going to be here, unfortunately, for some time. So it definitely can be utilised as an Airbnb or holiday home. It was defensive and strategic buy given the environment that we're currently in. And I did see properties that were renting there per night during the summer months at $800 per night. So there's nothing stopping it from being utilised as an Airbnb and maybe sneaking some nights there in between. But obviously from a tax point of view, you won't be able to claim a certain amount of deductions based upon the private use of that property as well.
Yeah, always an account, mate. So this is interesting. What's going to cost you to build the thing?
We've got, again, being John, this particular gentleman, when with John being a town planner, he built and designed the home in a way that we'll know roughly what our prices are with the materials. He's got an extensive relationship with a lot of builders. So we're thinking build price will probably be around about the $850 mark, which is not cheap for a duplex, but by far not the most expensive. So we should be walking out with the whole thing costing each side about $900,000, give or take, on my feasibility.
Yep.
And end values there may vary between 1 million to say 1.1 each side, even upwards depending on the view that we're able to obtain.
So $850 in plus stamp duty plus all your other costs.
Yep.
Another $850
plus incidentals.
Plus incidental, $850 to build it, holding costs of the mortgage up to that point. So you're in for about another $100K each through that process. So all up.
Yeah, so based on FISO, it's about 1.697, which is the total cost in. That doesn't include cap rate interest. Add another, say, $60,000 worth of cap rate interest, you're in it for about 1.75 as a total. And then, say, dividing that by two people, it's about $875 each. So, got the calculator out. So about 900 is what I've worked out the end cost to be.
Okay.
And for all intensive purposes, a number of agents have said 1 million is very conservative. You'd be hoping for that 1.1 to 1.2 range as a sale.
So you just need the val, though, to refinance the debt, right? Is that the idea?
That's the idea, yeah. So once it's all completed, we'll be able to get a full valuation and then go from there and be able to extract whatever potential equity that we or money we had to put in and use that to go again.
So the question is, Jeremy, are you happy with those numbers? Is the juice worth the squeeze?
Yeah, well, I think to buy in that area, if you do a little bit of research and anyone who's out there is quite interested, there's not a lot for sale there. I think there's probably only about 5 or 6 quality properties on that eastern side there at Shell Harbour, which are for sale. So it's very closely held area. When they do come up, especially being so close to the beach, which is about 100 metres away, this one is, very tough to secure these properties. So people hold them for a long time.
Yeah.
So it's what you need to pay to get into it. And as I mentioned, it is a defensive purchase. These things will tend to hold their value. And if you look historically in property dips, the prices on properties, in your Bondi and Coogee and Maroubra and all the way up the coast with water views, all being so close to the beach, they've held their value.
Yeah.
Very rarely do they drop significantly or drop even marginally.
So this time next year, mate, we should be able to talk about the finished product, no doubt.
There will be, yeah. If all things go well, we'll be hoping for a mid to late March start or even early April. And hopefully December it's all completed.
Oh, that's cool. Interesting. I'll sort of drill down a little bit of that in with you because a lot of people will be interested in that. But it all comes down to, and you mentioned it strategically for you, it's a defensive play on the basis that the coastal properties like that over time should hold their value and if not grow. And no doubt you've done your numbers on that particular area in Shell Harbour. There's good access to train lines down there. There's a lot of people now using that as a launching pad to commute into the city under flexible work life and all this sort of stuff. So I can see why, something like that is attractive for you. I want to have a chat about these other properties and also sort of longer term picture. We'll just go to a break beforehand, back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with property investor Jeremy Iannuzzelli, a good friend of Smart Property Investment. We have him on this time every year. He's always up to something. He's the quiet achiever and he'll come out every now and then and tell me what's going on. Now, you said you went pretty hard the latter part of 2020. You like buying over that period. That's consistent with your strategy. You mentioned that you picked up 2 places in Queensland. What were they? When was that?
Yeah, so it picked up a property in June in a place called Eden's Landing. Again, a buy, renovate and sell property.
Okay.
So just some cosmetic renovations and that went well. It's made about $40,000 worth of profit, which we're very happy with for the outlay we had to put in and the time. So very happy with that one. I sold a property in Campbelltown in the mix of around about February, which was a property we spoke about a couple of years ago. I bought with my father and uncle, which we paid $455 for it. And we sold it for about $645 with absolutely zero money being spent on it. And we held it for approximately around about 18 months. So
wow.
Very
Did you
happy
buy
with that
well
one.
or the market helped?
We bought just prior to the election and the plan was always to knock it down and build a boarding home on it. And then just reviewing the numbers and just the way that the market was performing, I started to look at the feasibility of a boarding home based upon the current sale price at $645. And would I be buying that property at $645, knocking it down and build a boarding home, and what would my margin be? And it was very, very slim. So that's where it was a smart decision not to go ahead with it and to kind of take the $180,000, say, of profit that was made and split it the 3 ways. So very happy with that. That led me on to buying another property in Queensland for the renovation. My plan was always to buy in Western Australia this year, but I know that the yields there aren't the best. So I needed to accompany that particular purchase in WA, which settles today being the 12th of January. I needed to accompany that with a little bit more of a high yielding property. So I found a property in Queensland, good corner block, bought it quite well, spent about 20 grand to reno it. I'll be putting a granny flat on it. All in costs, including the purchase and the granny flat, will be about $360. The rent that it will achieve at the moment, the main house is renting for $380. I bought it for $235. I spent $20,000 to reno it, so $255 renting for $380. I'll spend about $100,000 to build a granny flat, rent that out for hopefully around about $300. So about $355 all in costs for a $680 rental. And that helped me to buy a property in WA, which is a 1,000 square metre corner block adjacent to a main road and a cul-de-sac, which is zoned R60 to R80. So for anyone out there who doesn't understand the zonings of WA, you'll see normally 2 zonings, either R20, R40 or R40, R60, R60, R80, moving all the way up to your high density. So with this particular property, I know as it stands, when the market does quite well, you can build 10 units. And the reason why I know that is because Nextdoor many years ago built their 10 units in the height of the WA market. The property's not ideal. It's very run down, paid $340 for it. Very run down. I'll have to spend about 10 to 15 just to bring it up to standard. And the rent will probably be around about $270 to $300 per week if I'm lucky. So not overly a great geared property, but accompanied with a good high yielding property in Queensland, it kind of balances itself out.
So the idea is that you're pairing those two properties together, so you're getting cash flow out of the Queensland property to complement the holding costs of the Perth property. Now, what's the plan for the Perth property? Are you thinking you're going to get capital growth out of it without development?
Yeah, so it's just something where being in that zone in R60 to R80, it becomes quite attractive because the minimum zoning on it is R60. My plan with that one is actually to subdivide it straight down the middle because, not many people want to take on such a development of 10 units. But as soon as you've got a development of, say, 5 units, then it does open up the ability for, say, a mum and dad investor to come in, buy it and potentially do it themselves from a cash flow point of view. So my plan is to not go ahead and do 10. My plan is to subdivide it straight down the guts, get the main house into a position where it is, tenantable quite comfortably.
Can you do that, splitting it? Like, do you have to move the house or can you split it?
No, it's a great corner block. House is already all the way to the front. So I had that vision already and, split it straight down the guts. I'll have a vacant block zoned R60 with about 500 square metres and a house and block for another 500 square metres zoned R60. So all of a sudden I've turned one, say, larger development into now 2 very small boutiques. So it just opens, I suppose, a different target market.
That's sensible. So that's been really strategic in buying and selling. So did you deliberately go out and find this Queensland property on the basis that you knew you were going to invest in a lower yielding area in Western Australia, or was it the other way around? You found this property, did something to hold it, and then went and found a property to pair it with in Queensland?
Yeah, I've been researching WA for the last 18 months, and while yields have slightly got better, it's still nevertheless quite low compared to a lot of the eastern seaboard of Australia. So I was always looking for a really good, strong yielding cash flow property where I wasn't really too concerned about growth. Although it needs to have some, avenue to grow, I was more concerned about good rental, strong income and, I suppose tenants which aren't going to walk out like a revolving door. So that was the plan. Get a good, strong cash flow property. Don't choke up too much of my borrowing capacity. Get something which is a corner block. I can put a nice granny flat on it where it looks like 2 separate homes. And then judging by whatever rental income potential I get from that, it'll give me the ability to offset that against the holding costs of a Perth-based development property. So I was very strategic in Perth. I didn't want to just buy a house on a block of land. I didn't want to buy a house where you can just put another one at the back. I was very strategic that I was looking at an R60 or an R80 property because there is value there as long as you can make the numbers work.
How's the rest of the portfolio, the older stuff? Is it going well?
Yeah, ticking along really well. I'm obviously
Any headaches?
I've had a couple headaches, Corona, I had another property where it was just absolutely trashed, but, was able to get in there a bit of landlord insurance as well as my own capital. I was able to get that rented. And again, just silver lining, it was initially rented at $320 a week. Since doing the renovation, it was now rented at $430 a week.
Where's that?
That's in southeast region of Queensland.
Okay.
So I was getting $320 for a 5-bedder. Now I'm getting $430 for a 5-bedder. After
some of the best things come badly wrapped, mate.
That's it. That's absolutely it. So, everything else is ticking along really well. I've sharpened up the rates substantially across the whole portfolio, and I've shifted actually against, sometimes what I preach to clients having interest-only loans for investment. I'm actually utilising this very low interest rate environment to start to pay down some debt. I've worked very hard on my own personal home loan to bring that down to a point where I'm quite comfortable. And I'm going to utilise this time to strategically buy properties, of course, if the numbers are right. But if I don't, I'm going to actually work towards paying a lot of this debt down because the environment that we're in is very unique. No one's been in this environment, this low interest rate environment before. And I'm saying to a lot of people, it's actually not a bad opportunity to get things under control. Because if you do, for instance, buy in the later point of the cycle and you do overpay, for instance, and rates do go up, you could get exposed very quickly. So if you can get your debt down to a manageable level, utilising these low interest rate environments and some of these crazy P&I rates that some of the banks are giving, it's not a bad opportunity to do so.
Yeah, that's smart counsel. We're going to get another break, Jeremy. When we come back, let's get a bit of an insight, your philosophy of property for 2021. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with investor Jeremy Iannuzzelli. Now, Jeremy, question for you, mate. It's something I struggle with. You seem a lot more proactive and connected with your portfolio than I feel I am with mine. I've got to work hard to try and keep on top of it. It's a headache sometimes. But like, how do you sort of do your day job and also do your property investment stuff, or is it all one and the same?
It's all one of the same.
Yeah.
I'm very lucky that, during the day I get to have take glimpses where things are, make some phone calls. So, being a partner and running my own race gives me that ability to kind of manage both things.
Yeah.
It's not exciting. It's definitely not the glitz and glamour of property investing that people tell you about.
Property investing is a headache, mate.
It's
I
not
don't know why
easy.
anyone thinks it's glamorous.
Yeah, it's definitely not easy. And I think that's been a big factor. I did start off buying very cheap properties and then progressively now starting to go towards a more expensive end. And I just think that's more knowledge, the ability to borrow more, earning a bit of extra income always helps as well. So that's my path. I'm going to stay away from, I suppose, the cheaper ones as much as I can and focus more on things that I can add a substantial amount of value to.
And you get to have that opportunity because where you are in, I guess, the life cycle of you as a property investor, but younger people just starting out or anyone just starting out, if you haven't got big salaries, you've got to start somewhere, right? But you spoke about that snowballing effect. It's only through going through that process. You've been investing now for how many years? Like
over 10 years
10
now.
years, you can actually start going, well, I can start investing in these type of assets now because I am able to do it because I have a portfolio which generates money. You make more money as a professional, so you get to do that. But if you haven't started doing that, you can't just start doing that, from the get-go. You've got to start somewhere. So, if you're not yet investing in property, the best thing you can do is start. Make sure you do it with the right people in the right places and trust the right professionals. So for you, Jeremy, and we've spoken about this in the past, property, I know it's a bit of a family thing, runs in your blood. Is this, you're not doing it because it's glamorous, you're doing it because you want to make a buck at some point in time. What's the long-term vision, mate? Has it changed since we last spoke?
Oh, no, I don't think it has changed. We're all here to make a good, honest dollar. There's definitely no doubt about that. But I think what I will do is transform the portfolio. The earlier properties that I bought, go back, enhance the value by knocking them down and putting a duplex on it or adding value. I'm going to focus, properties where I possibly can to enhance the value with my own hands and my own brain rather than waiting for time. I think while we're heading into a very bullish couple of years with the property cycle and the property market, it's not going to continue like that forever. There will be ups and downs and peaks and troughs. So I'm very keen over these next 2 years to try my very best to see what opportunities there are. And if there's not a lot of opportunities, the numbers don't work, I've, be paying down the loan and working towards building up much more of a passive income and keeping the headache-free properties as much as you possibly can.
Yeah, I've had some headaches lately.
Not afraid to get rid of the headaches. And that's why I've, sold a couple this year. And if the market dictates and the numbers fare well, I'll sell more. Definitely sell more.
That's fair enough. Well, why do you think property is going to be so good over the next coming years? You spoke about a low interest rate environment, but what else is going to drive it?
Mate, where are you getting good returns at the moment? I know returns are all very relative compared to the asset prices, but
I'm getting 0.1% on my bank account.
Yeah, mate, and you'll get probably 0.4 on top for a term deposit. So there's absolutely peanuts available, and that's why we're seeing such an inflated share market. That's why we're seeing Bitcoin at 45,000 Australian dollars or 38,000 US, and that's just purely people saying, well, where else do I put my money for a return? Banks don't need to give you a high interest rate in your bank account because they've got so much money from the RBA to lend out. So, that's a huge kicker for them. Liquidity is not an issue anymore where it was, say, 12 months ago, where they needed to give, a little bit higher interest and the margins were becoming very thin. But now they don't have that problem. So, they'll be able to really facilitate the property market. State governments came in with a lot of building incentives. Government came in with a lot of stimuluses in aid of the coronavirus. So, we're going to see a huge, couple years in the property market, and that's just natural. When you've got that much money being pumped into an economy, you've got asset inflation.
Yeah, it's fair enough. And look, everyone I speak to, and I speak to a lot of people in property, everyone's pretty consistent. I remember when COVID hit, on the record, pretty much going, yeah, when a lot of the sentiment coming out of the major banks and their very smart economists saying there's going to be a 20, 30, 35% drop in property values, I didn't subscribe to it then. And I definitely don't subscribe to it now. So that rhetoric has definitely changed. And some very smart people I follow and watch and recognise as people that know what they're talking about are all talking about some pretty good numbers coming out of property as an investment class moving forward. So we'll keep stuck into it. No doubt you'll do the same. Are you going to buy anything next coming period? Are you going to sit and wait and let it stew?
I'm definitely going to sit and wait and let it stew just to see what the first quarter of this year brings. We're hearing more global issues with coronavirus, and look, we are a connected world where what's happening in the US or the UK somewhat will affect what happens here in Australia. But nevertheless, I don't think that's going to impact as much as we all initially thought, but I'll still keep an eye out for it. That more jobs are starting to come back onto the radar again, more people back into employment. Yes, there is a shifting landscape, but there'll be more domestic tourism, which means more money's kept here in Australia as opposed to, being shifted overseas, our hard-earned dollars. So first quarter, I think it's really good time to observe, have a bit of an understanding of what supply comes onto the market. That back end of the year, it was a real big rush because there wasn't a lot of supply and people thought they needed to get in before, a property absolute Armageddon starts and, prices go through the roof. But I'm starting to see supply trickle onto the market a little bit, not as much as I'd say used to be there, but nevertheless it is trickling. And I think as an investor, people need to really understand what supply, speak to your agent, what's coming onto the market. Don't be afraid what's in your pipeline, what properties are you seeing coming on, because agents will strategically position properties at certain times of the year to get their best bang for their buck for their clients. If it's a great pool, they'll try to position in the summer. And if it's got a great man cave, it'll be something that they try to utilise in the winter. So these are all little things that, I've learned over the years and just speaking openly with the agent. What have you got coming on? This is what I'm looking for. Is there an opportunity to have a look at this before you bring it to market? Or, can I be one of the first to get in there?
Fair enough. Well, thanks for sharing those insights, Jeremy. Good to see you, mate.
Pleasure.
We're long overdue a catch-up as well, so we'll work that out at some point. But keep at it. Keep doing what you're doing, mate. And, I do enjoy you sharing your journey and your story as a property investor through Smart Property Investment. So we'll make sure maybe we should do it more than once a year and every 6 months because you're pretty active. But thanks for your time today, mate.
Pleasure. Thanks, Phil.
Nice. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to a daily morning newsletter, so the first to know what's going on in property right across Australia, smartpropertyinvestment.com.au/subscribe or social media, if that's how you like to get your info. Smart Property HQ, you can find us there. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.